Good morning, everyone. Welcome to this webinar today, Turning Tax into Strategy, the New Advisory Edge. Today I have Darren Gleeson with me, the founder and managing director of Tax Fitness, and I'm Peter Towers, managing director of ESS BIZTOOLS. I'm just going to introduce Darren Gleeson to you now. G'day, Darren. How are you?
Good morning, Peter. Good morning, everybody. Thanks for the opportunity to talk today about advisory.
Okay. And Darren will be with us a little bit later to give his overview on the services that Tax Fitness supply, particularly today looking at benchmarking. This webinar is targeted at accountants and bookkeepers and business advisors. Therefore, I thought it appropriate that to ask this question: how do these figures reconcile? Only 15% of businesses viewed their accountants as key strategic partners, according to Intuit QuickBooks in their SMB Navigator Report 2025. Only 15%. Now, key strategic partner was defined as a key partner in our business and our go-to professional for advice, and they are extremely valuable to our business growth and success. Now, I'm sure that's how all accountants and bookkeepers and business advisors would like to be described by their clients, the go-to professional for advice. But only 15% of the 500 small businesses that were surveyed for that report by QuickBooks gave that rating. About the same time, I come across the MYOB Accounting Industry Monitor 2025. And in that, it indicated that 80% of progressive practices want accountants to describe themselves as strategic advisors. This was after a survey of 370 accountancy practices across Australia. These figures just don't reconcile, do they? Small businesses are saying 15% satisfied the definition, and yet the accountants that were interviewed indicate that 80% of them are strategic advisors. In the survey conducted by QuickBooks, 85% of them voted that accountants are not necessarily our go-to advisors. My question is, well, who is? But then a further group said accountants are a service provider who provides a straightforward service and not much further. And that figure was about 30% in the overall equation. So there was a lot of people who were not happy with the advice they were receiving from their accountants. I think this is a very serious misconnect. So who's in the wrong? The SMEs? Are they being too harsh in judging the accounting profession? Or have accountants got it wrong? Let's explore what could be the misunderstanding. In Accountants Daily on the 26th of August this year, an article was written, "Accountant calls on industry to address trusted advisor myth." So in this segment, the terminology has been referred to as trusted advisor. But let's just look at it. Is it a myth? And in some respects, when you look at the response from those SMEs in the QuickBooks survey, they would be saying it is a myth. Accountants Daily quotes Eddie Senator, a chartered accountant, ex-Deloitte partner, and of particular interest to me, he's an insolvency expert. So he's looked at the way accountants perform who are there at the coalface giving the practical advice. Insolvency practitioners come at a different angle, as we all know. But I think he has some important information that accountants should be taking notice of. He said accountants are struggling to properly service and efficiently help their clients with their cash flow and business operations, which is contributing to the increase in small business insolvencies. Now, small business insolvencies and general failures are at the highest level ever, according to the Small Business Ombudsman, who writes a report every quarter, and you can get that from his website. Incidentally, the Ombudsman is the former Liberal government Minister for Small Business that's been appointed by the Albanese Labor government. I think he knows a bit about business. He was the Small Business Minister. And he's saying that the problems are the highest level ever for small business operators. Where do we sit as accountants with those sort of statistics? Senator indicated that he conducted 80 interviews with accountants and bookkeepers. And in fact, I've heard him talk in a podcast subsequently to that article being written, and he said 80 were accountants and 20 were bookkeepers. But that's not how Accountants Daily originally reported it. And one of his questions is, why are small business clients still ending up in financial distress even when they have a trusted advisor? He then goes on to say a tough reality was that trust was not built through infrequent transactional interactions. Instead, it was built through discussions with your clients, understanding the client's business. What are the client's goals? What are their ambitions? And what specific challenges are they facing? You sit down and talk to your clients about these issues, how their business is going, who are their new competitors, how are they going to counteract the new competitor opening in their area? What are their goals? Have they got an idea they'd like to sell their business in the next few months? If so, they should be preparing now. I think it takes 2 years to get a business ready for sale at the right price. Senator then commented, my recent study of accountants shows that, somewhat surprising, accountants are still focused on tax accounting and tax strategies. Now, I'm not here to cast criticisms on accountants performing the tax side of things, because it's still very important, of course, and your clients don't want to pay any more than what they legally have to pay to the Australian government. But there is a whole range of other activities as well. I've been an accountant for a long time, and I've never been convinced that a business can run effectively by only receiving their tax return and an annual set of accounts. It's too late, and it doesn't help them making their day-to-day decisions. And then Senator said, one way to test whether accountants are in fact trusted advisors is ask clients whether they would still have a relationship if end-of-year tax work, through some stroke of magic, was not required. When you look at the results where 85% said that the accountants were not their trusted advisors, I suspect that a significant number of those people would have walked away from an accounting firm if what Senator is proposing there come to fruition, because they were not receiving any additional advice. They were only going there for a tax return. Or in some cases, they had other people they were getting advice from. Now, those other people may have been competent, but I suspect overall they were not as competent as what accounting advice would have been for them. Senator goes on to say, to create value, accountants can benefit from rethinking their approach, moving away from the catch-all phrase of trusted advisor, and instead concentrating on fewer clients, offering them more dedicated tailored services. If you watched our webinar last Wednesday, and then the follow-up podcast, which was last Friday, when I had Andrew Geddes, one of the joint founders of the Financial Management Research Centre from the University of New England 40-odd years ago, Geddes made exactly the same point. Accounting firms have got too many clients. We need to narrow the number down so we can offer far more effective services. And he said, there's no doubt, he's proved it time and time again, the quantum of fees will increase because you're doing far more work. You're assisting their clients to survive. You're evaluating their performance. One of the challenges that Senator identified was that accountants and bookkeepers showed hesitation to address financial issues early on, as both clients and the accountants often waited until problems become severe before taking action. And he was referring, of course, to the high rate of failure that's occurring in the SME community. As an accountant or bookkeeper, you have the knowledge and insight to lead conversations about financial health. Rather than waiting for clients to raise concerns, take the initiative. Now, they're the words of Senator, but I agree with them 100%. I wouldn't be using his words if I didn't agree in any case. But that's a very strong statement. I think we need to be putting ourselves in the position as if we were the employed internal accountants. Now, I had a position like that for 12 years as the Chief Financial Officer and Company Secretary of a listed public company. I wouldn't have survived if I just sat there and said nothing in the day-to-day activities. I was one of the leadership team members. There were 12 of us, and we were expected to argue and fight and debate. And there were some full-on debates at times as to which way our company should be going. We were a major Australian meat company. We were exporting to the world markets. So there was a number of conflicts. Sales wanted to sell meat in one way. I may have had a different viewpoint, currencies, all sorts of things come into the equation. Your clients need that sort of advice as well. The more proactive you are, the more likely your clients are to succeed, Mr. Senator said. And then he said, humble inquiry is a skill. Think about it. Humble inquiry. Just sitting down and talking. Andrew Geddes says it a different way. He developed a needs analysis, which in ESS BIZTOOLS today, we've got the ESS needs analysis, which Geddes has edited for us a couple of times over the years. It's a bit the same as what Senator's saying on humble inquiry. Go and sit down with your client, have a few dot points, which if you can't think of them yourself, you could go to the SME system and look at what we had. Dot points. How are you going with gross profit percentage? Have you got any concerns about succession? How's Jimmy going? He's your number 2. Does he understand corporate governance? Would you like us to run some sessions for him? What tracking are you doing on key performance indicators? Are they being monitored? Is someone really bringing the variations to your attention? And Senator, the quotes I'm going to finish with him now is, remember, it's not always about the numbers. There are other issues confronting people in businesses. We need to be the listening ear and then give him advice. But he did go on a bit, and I forgot I had this, and he, watch out for the warning signs. He gave an example. Don't just have a casual conversation with the client when the tax return is completed. He wrote it this way. Accountant says, how's business to the client? And the client says, great, we are busier than ever. And the accountant says, that's fantastic. See you next year for the preparation of next year's tax return. And off the client goes. Just think about it. Do you have conversations like that, or some of your team members? What Senator suggested is that based on his experience as a liquidator, the conversation should have sounded more like this. Accountants, you're taking on more work. But what is happening to your cash conversion cycle? An important question. Debtors figures are far too high. A few years ago, we won as a country a very dubious international award, the highest debtors days outstanding in the world. I don't know if things have changed much. My observations are it hasn't. I haven't seen any more announcements. I think we've probably still got the cup. That's a national disgrace. And this is the cash conversion cycle. Are you getting paid faster or slower is a question you could ask your clients. What's your work in progress? I'm glad he asked about work in progress because it's one of my particular hate areas when I'm analysing businesses. I've seen some businesses really build up their investment in work in progress because for various reasons, progress claims are not being processed. It's one of the key areas I think you should be looking at. Make sure they're raising progress claims weekly if they can get that agreement with their customer, but most definitely monthly. And what's that tell us about the profitability of the business? So what he said was the first approach is treating symptoms, but the second address is the causes, getting to find out what's the problem within the business. And I'll give you a warning. If you approach in this manner, you will get more work because your client will say, well, can you do something about this? I didn't know you could do that sort of work. I've only thought of you as being the tax return preparer. So know your client. I think it's an important message out of what we've been talking. In ESS BIZTOOLS, we have the theory that you need to understand your client and 1 inch wide but a mile deep if you are going to be of full service to your client. Now, that is far wider and deeper than the knowledge you probably have to prepare the tax return. So we have what we call the business review analysis that suggests you start with the familiarisation of your client. Now, you might say to me, geez, I've been the accountant or tax agent for this client for a number of years. I really do ask you to think about how much you really know about that client if you've only been doing the tax return. Do you know about the ownership of various assets in the business? Where are the title deeds? Who's got them? Which ones are mortgaged? Which ones aren't? Because you might be called upon to help the client with some financial funding situations. Are the financial accounts and weekly performance profitability estimates? Hang on, what are they? You might say. Well, that's what the big end of town use all the time. And I think all SMEs should be using a weekly performance profitability estimates. And they should be prepared in individual P&L accounts for each business, not all consolidated into one profit and loss account, because that's where problems can be lost. They're just absorbed because there might be one good business, but there can be some very bad performers in there, whereas if they're separated out into separate profit and loss accounts and separate weekly performance reports, the problem areas will be identified a lot quicker. So this can cause a lot of problems, a lot of inefficiencies. And I suspect you don't become aware of that when you've been just preparing the tax return. You could ask, what's the debtors days outstanding? Have you discussed that with your client? I've come across accountants who have said to me, it's not my concern, Pete, to worry about what the debtors days outstanding was. In that particular case, it was 102 days because I'd been asked to calculate it in a public forum I was running on director's duties. 102 days. And the accountant had not said anything to the business. And he admitted that to me. He was there to do the tax. What's the level of investment in inventory? Is it within what their budget estimates were? Why is it going up? Has a system been implemented for the recording of key performance indicators and business metrics, daily, weekly, monthly, and analysed? KPIs and metrics are very important. And then we have the 52-week business enhancement system, which we endorse at ESS BIZTOOLS, that there's a process that's happening daily. You mightn't be too involved in that, but I think you should help set the system up for a one-page daily report to go to the key people in the business. Weekly report is very important, the weekly profitability report, and then a team meeting to consider the results. And monthly financial accounts. And then we roll it again into the next month. Because that's what bigger businesses do, the ones that generally survive. We need to do the same thing for our SME clients, I think. No business sits solely on an island. Everyone has a competitor. How is your client's business performance rate when their business is compared to their peers? Or don't you compare it to their peers? Benchmarking keeps your client's leadership team aware of how they compare to their competitors, how strategies can be developed, how weaknesses can be identified in their business. And I've got a man who's an expert who's now going to talk to you about that. Darren Gleeson, the Managing Director of Tax Fitness, will now discuss the benchmarking system, which will help you to raise these discussion points with your clients.
Thank you, Peter. I shall now share my screen.
Yeah, if you can share your screen, thanks.
I've actually sent you a request. You've got to give me the access.
Oh, wait there. I haven't done that.
But in the meantime, as a sobering statistic for you all to think about, 43% of small businesses are not making a profit. Okay, so basically every one of the 34,000 accounting practices in Australia are going to have a percentage of their small business clients that are not making a profit. And then we've got another 20 or 30% of small business clients that are not even making a market wage. So they're making a bit of a profit, but they're not making a market wage. So this is the opportunity for the accountants.
You're online now, Darren, thanks.
Okay, I shall share my screen.
Yeah, I got you, yeah.
Okay, can you see the...
It's coming on, it's not there. Yeah, just come. The screen's just come up now, the report generator.
Okay, fantastic. With the 34,000 accounting practices in Australia, my experience dealing with 500 or so over the last couple of years is probably only 10% are really actually providing meaningful business advisory services to their clients. And what I mean by meaningful business advisory services are the ones that are actually charging for it. They've got a process, they've got a fee, they're adding value, they're charging. The other 90% of the accountants I talk to, they're all supposedly providing business advisory service, but it's, as Peter said, it's a 2-minute conversation at the end of the tax return and it's free. It's not business advisory. Okay, with those practices, the 90% that are not providing meaningful business advisory services, my experience is that probably 30 or 40% just don't want to do it. They're not interested, and that's fine. There's another 30% or so that are interested and want to provide the services, but they just really don't have the capacity. And that's another issue and another day to work on how to create that capacity within their accounting practices. And then the third group, of course, which we can help, are those that want to provide business advisory to their clients, identified the need, but lack either the skills, the process, or the software. And that's where Tax Fitness can help them. Okay, let's jump into it. Today we're talking about the top 20% business benchmarking. And in Tax Fitness, I'll show you the accounting practice one, we've got over 400 different industries. And we've benchmarked them against the top 20% in their industry. So clearly not every client and not every accounting practice can be in the top 20% in their industry. But those that want to improve performance, these are the KPIs that we should follow and work towards. Okay, the other thing about our database is that we're only benchmarking 6 or 7 main KPIs. As you can see it there, cost of goods sold, subcontractors, rent, wages, overheads, owner's comp, profit. Okay. Attached to the top 20% business benchmarking database, we've also got our business advisory database. The business advisory database has got over 350 pre-written strategies, and we'll just have a look at, they're all in different categories: how to increase sales, succession planning, estate planning, legal obligations, asset protection, etc. We have a look at the ones for reduced cost of goods sold or materials, for example. You can see that we've got 30 or so strategies pre-written how we could reduce cost of goods sold. So what could we do to do that? We click in there, implement material substitution, for example. And then the strategy talks about the overview, the explanation, why we'd want to do it, and then the process, as you can see, step 1, step 2, step 3, how we would go about it. Okay, let's jump into it and prepare a benchmark. We'll set up a client. Okay, so we've set up the client. We've imported the financials from Xero. We can also import the financials from Measurable QuickBooks. We just click on that button. It takes 20 seconds, but I've already done it, so we won't waste that 20 seconds. Okay, what we want to do is now we want to prepare a new report. The software also includes tax planning software, but we're not here to talk about tax planning today. That's another day. Okay, we've set up the client. We've imported the financials. The next thing what we want to do is we want to select the industry. This one, for example, is cosmetic injectables industry, Botox, beauty, all that type of stuff. Okay, changing the financial year to 25. Okay, this prior year is the year ended 30th of June 24. These are the actuals for year ended 25. They've been imported the way they've been coded through Xero. Sometimes we need to make some adjustments. For example, in the wages, 331, there is the director's wages and super. So we've got to increase that and bring that back to 191. Okay, the other thing is in overheads is actually this client's set up a second clinic. So there's about $220,000 of instant asset write-up for the second clinic. Okay, so we need to make that adjustment. Those adjustments we just did then, we can actually do that and pre-wire it in the Xero account if we wanted to. Okay, the other thing is we're benchmarking against the top 20% KPIs for the industry. As you can see, rent is 7%. If we thought rent should be 27%, we can just change that, see what the numbers look like, but we probably don't want to. Okay, why we like to benchmark against the top 20% is because if we had the conversation with the client, the prior year, 30th of June 24, 55 grand profit after the owner's wages and super. 30th of June 25, 200 grand profit. Good result. But the question is, could they have done better? And that's what the top 20% shows. For their current level of turnover for that year, the $1,058,000, if they achieved the top 20% benchmarks, then they would have had an extra $64,000 in their profit. Okay. The big issue, of course, in this case is cost of goods sold. They were paying probably 30% of sales revenue for cost of goods sold instead of the top 20%, 25%. It's costing $58,000. Okay, so we know what the problem is. What are we going to do about it? That's the question. Okay, we've got our filters. We've got our 350 strategies. Cost of goods sold. Some things are probably popping into your mind. What can we do to reduce cost of goods sold? What do we think? Okay, what can we do to reduce cost of goods sold? How about we just order in bulk? And that's how we do it. We want to customize the wording of the strategy. We can go through there. Another strategy, implement material substitution. Optimize inventory levels, reduce the wastage in the products in the tube, and let's seek international emerging suppliers. Okay, the other thing is when I do a report, I like 4 or 5 strategies fixing the number one problem, and then 4 or 5 strategies increasing sales. With this client, we're looking at Google reviews and Instagram reviews, performance-based pay for staff, sales training, so important, and we're increasing conversion rates. Okay, preview the report. The other thing is I should say about the top 20% business benchmarks database, we've got 400 or so industries. If you go in there and you've got a client or an industry that's not there, flick us an email. Within a couple of hours, maximum 24, we will create the industry benchmark for you. Okay, we've got the report name called Business Advisory Report. We can change that to Darren's profit-making report or whatever you like. You can customize that specific report. You can also untick these little boxes here and shorten the report if you want to get rid of some sections. Of course, it wouldn't have the awful purple color, and the horse would disappear and be replaced by your logo and your branding, etc. Okay, for the client, probably the most important section to sit down and go through is section 3, where we show them this is your profit for the year ended 30th of June 25, 200 grand. And we've separated out the owner's market compensation. We benchmarked you against the top 25%, the top 20% in your industry. You should have made 264. Big problem over here, or we got a few problems, but we'd like to focus on just big one at a time. Cost of goods sold, cost you $58,000. What are we going to do about it? These are some of our strategies to fix the cost of goods sold and some to increase sales. These are the numbers. We've got 24 and 25, but we can actually bring in up to 4 years of comparatives. Net worth, as I said, we've got 24, 25. We could bring in up to 4 years. We've got the strategy and how to fix the problem. At the bottom, we've got the disclaimer. And that's it. Some clients, we do this benchmarking with annually. Some clients, we do it quarterly, and sometimes some clients, we do it monthly. Okay. We have a look at the price list. Benchmark. There we go. Okay, those at the bottom here, where it says complimentary free, those 20% industry benchmarks that we showed you out of the database, 400 different industries, they're perfect once to introduce the client to benchmarking. Once you're having the annual compliance meeting, we've gone through all the tax stuff and all that boring stuff. Pull out the benchmark for the industry and say they're an electrician, for example, and just introduce them to some of the KPIs and the benchmarks that apply to the top 20% in their industry. That is the way to introduce it to them and to go from there. With the pricing, of course, we've got different prices. As I said, up the top, our premium package, these are for monthly clients. We've got some accountants that have taken, or one accountant over the last couple of years has taken a $3,000 annual compliance client to $4,000 a month, so 48 grand a year benchmarking fees. And you think, gee, that's a lot of money. But there's a couple of things. The client had $12 million turnover. The second thing is, in that 2 years' time, 2-year period, the accountant and the client have taken their business from 300 grand a year profit to close to 2 million. Okay. The other thing is, with our resources, we've got a tax fitness top 20% business benchmarking manual. Well, once it loads. Okay, it's about a 120-page manual. It's like everything else that we, as accountants, do. It needs to be systemized. Every process we do needs to be systemized. If we just go down here a bit. Here we go. Okay. The blue's not that clear. But anyway, as you can see, we've got a 10-step process. So we've got the systems about how to introduce this benchmarking to your clients and into your practice, information gathering, which Peter talked about. So critical, fees and charging, which is another issue that a lot of accountants have problems charging with business advisory. Step 4, how to educate the clients. 5, sell the service to the client. Our 2 databases, which we just talked about. How to select the strategies. I actually showed you the manual system of selecting the strategies, business advisory strategies. But we've actually, about 2 weeks ago, we launched the AI to select the strategies if you want to go down that path. And then we've got the report, and then we've got the presentation of the report, and then implementation. If you're watching today and you are interested and you want to have a bit more look at this top 20% business benchmarking, just flick us an email. I'll just actually share my screen now, tax fitness screen. There's a couple of things you can do. Okay, you can go to the Tax Fitness website. You can book a demo up there. The other thing is you can actually flick us an email, and if you'd like, we can send you a copy of our top 20% business benchmarking manual. Okay, that's pretty much it. Peter, back to you.
Oh, okay, righto. Well, I'll just get it to come back to me somewhere. Okay, so I'll get you back on, Darren.
Okay, I'll stop sharing. Yeah. Back to you.
No, I'm having trouble with that. Okay, well, we'll just there were a couple of other things that I was going to mention just to wrap up. ESS BizTools has got a full supply of services, and if you wish, you can view all these on our website. So we start with different packages. There's about 35 separate packages within the system, and these are the main subject headings. Prospect marketing, very important to help the subscribers, the accountants, to be able to prospect. Communication with members, member team training. We have training each month. Marketing and promotional tools. Know your client, that's that business analysis review. Administration, corporate planning, budgets, cash flows, forecasts. Cash management, advisory and strategic support, business development tools, financial management, capital raising, crowdsource funding, equity raising, early stage innovation company, section 708. We've got product packages for each of those so that you can assist your clients on that journey. We've got risk management of the various areas, administering debtors, of course, but and other areas. And then we've got industry specific, which is looking at small businesses, tradies charge out rates, retailers and wholesalers setting prices to achieve their profit targets, and professional service firms charge out rates to earn an overall profit. We have an Accountant's Minute podcast on Friday at 11 a.m. AEST, where Darren and I are going to talk about the issues that we've discussed today. If you would like to send us any questions, please send me an email, please, peter@essbiztools.com.au. You can log on to attend the live podcast broadcast if you like, and listen in on the discussions, and send us messages through chat, and we will look at trying to answer those during the session. If you want more information on tax fitness, please go to Darren's website, www.taxfitness.com.au, to check the products and services that his organisation are offering. If you want more information on ESS BizTools, please go to www.essbiztools.com.au. What we have on the screen now is the home page, and to find details of the products and services, please click on to packages and pricing, and that will give you the overview. And to register for the to get the complimentary Zoom meeting, there's the email address there, and my telephone number if you wish to make contact. That's if you want to have a one-on-one meeting with me to discuss ESS BizTools. So thank you for being with us today. Thank you, Darren. I'll just see if I can share again, but I seem to be having trouble with sharing here today. But thank you very much for being with us. And well, you're back on the screen now anyhow. So thank you.
We'll talk soon. See ya.
Okay, we'll talk soon. Have a great day. Goodbye. Oh, wait there. We have a question here. Oh, someone said thanks. Thanks, Sean. That was very nice of you. Thank you. And
Yes.
I hope you've learned something, and we've created some interest in as to the sort of services that accountants and bookkeepers you can supply to SME clients to try to help them survive and thrive in business, and if they wish, that they can scale up and become far bigger businesses. I think that should be the motto, the challenge for accountants to help businesses achieve that. I'm sure you agree on that, Darren.
100%. Yeah.
Okay. Thanks, mate. Thanks very much,
Thank you.
everyone. We'll talk to you again soon. And don't forget the podcast on, I'm back on the screen now, on Friday at 11 a.m. AEST. Thank you very much. And yeah, we got a couple more thanks here from Winston and Shion. Oh, we already had him. So thank you very much for our participants. We are sending this link to this recording to thousands of accounting firms around Australia. And if any of you people who view this recording after we've sent it to you have any questions that you'd like to ask Darren, pardon me, please send Darren an email. You still there, Darren? We'll include Darren's email in the message we send round to you. Or you can contact me at ESS BIZTOOLS. Have a great day. Goodbye.